Okay, good morning, guys. This is Simon with Trade and Perform Coaching. It is Tuesday, the 26th. So let's get started on what we have on tap for today in terms of econ, which will be right here. And we will see what Financial Juice has to say. And what they say is we have, let's see, 9 a.m. new home sales, all the way through 9 a.m., a couple of T-bill auctions. And then it looks like that's it. We have Google, Visa, MasterCard, and Twitter all at the close. So, um, you know, yeah, same thing as with Facebook. People are going to expect good numbers there. And we're probably looking to buy dips to push back up. If we get a good dip, it'd be nice. We could actually get paid. I have no expectation of today's price action. I have my assumption is they're going to continue to grind up. But I will hope for a pullback to see if I can find a good trade. So first of all, let's go look at the overnight and where the key levels were. So let's just bring this up. So let's start with CL. CL, we had, again, 83.51 was our swing location. You can see we got underneath 83.51. So I want to connect how that underneath that 83.51, how the trade set up, right? So here's all the way down into 83.20, right? So again, uh, a couple of things. First of all, you'll see that we haven't had that backside tested. It just did a V shape into this key area. And so what you had to add in your mind if you were trading this last night is you were trading within prior day's value area, right? So see how we slipped all the way through. And so this is where this throws people off. Hey, I know this 83.51 is a key area. I know I'm underneath 83.51. I need to get above a wave to the low, but what we don't want, like in a perfect world, we'd want all this to happen outside of value area. It doesn't always happen. So then the next question is, did we get a setup, right? Did we get a setup for the long side of the trade? And the answer is at 2:30. Um, I would have counted this as a high volume bar, and you probably would have gotten stopped on this even with a 20-cent stop originally. Additionally, you never got the algo to fire. So what we needed is you had the high volume bar here, right? So you have location, you have the high volume bar because you can throw out the first bar in the rotation, and then that makes this the high volume bar. But then you needed this bar right here to have an algo on it of some sort. Didn't occur, so there's no trade actually that would have happened there, and no trade set up again off to the right either. Right? There's just nothing to do. Then we come down, 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 down. So I want to show you something. You would have taken a one bar stop here. See how this was the highest volume bar? It looked like the wave was ending there in that particular case. So remember, you're trading, two things have happened. You've gotten above the wave to the high, right? So I want to present the good, the bad, and the ugly. You've gotten above the wave to the high. You've gotten a high volume bar, and you've gotten a speed bar. Okay, so um, Bill and I were talking about how many times, Joyce, that comes back, where if you get the speed bar, it comes back, and then it gives you this yellow bar right behind it. Here, I'll expand this so you can see it really easily. That has had a high failure rate at the high, right? So my suggestion is if you get this blue speed bar, it's immediately followed by a yellow speed bar, just sack the trade and get the trade early, because we've been getting a lot of, when we have been getting stops, those have been generating stops on that particular trade, right? So then you'll see that we continue to push down, right? Continue to push down. And here you see we end up with the biggest volume bar right at the end, right? Followed by the speed bar. And then you'll notice the difference between these two is that the very next bar gave a triangle up. So that's, you really want to see that triangle up come in after you get this blue speed bar. If you take that trade, you want to see that blue triangle up. And then you see just lifted beautifully. Again, what's the challenge? You're inside value area. So you're just going to have to make a distinction. Do you or do you not want to trade inside value area? The trade-off is in value area, there'll be more stops, right? Sometimes it produces very profitable trades. Sometimes it produces stops. And you have to just be mentally flexible there. If you take the stop, you go, well, I took the stop inside value area. And then you can see right here, we just haven't gotten back. You see we had this huge impulse move off the bottom. and we just haven't gotten back to even retest this wave to the low. Our line in the sand, we're going to actually create a little zone here. So there's one. Wow. The line in the sand in that case came all the way on this wave, came all the way up here to at the high. That's not very helpful. You're actually trapped underneath it now. So we would look for hopefully a retest and a setup into that 83.50 area. This whole area is going to act as support, and in particular, between 83.50 and 83.25 should act as support coming into the day. So does that clear? Does anyone have any questions over that in terms of CL? Hey, Peter, good morning. Good morning, Sean. So that's adapted. So this is the area, right? Because I can see all the deltas overlapped through here, right? So this is the most obvious place where between these two waves, the majority of the delta is right in this area, right? So I know that the point of control for the delta on this wave up was right here at 83.50, right? I know and I have a couple of reasons why. I've got the biggest wave off the bottom, right? We've pulled back. It's not a bear market, right? A lot of guys make the mistake of going, oh, it's rolled over. It's going to continue to roll over, but not at all, right? You actually want to go look at your retrace. Okay, so this area right here, from this 50 retrace to this 786, okay, that area that I've highlighted right in there, which starts at 83.68, you got the delta point of control at 83.50. You get the delta point of control from the down wave at 83.50. You've got all this delta stacked up from two different waves right in the same area, and you've got the 50-60 retrace. I'm just stacking up evidence, right? So what do I want in that last piece? I want to see one or two things. So see how we've pushed back? We haven't pushed back very far. I either want a bigger push, or I want to push into this 50 retrace and then structure to set back up. If it doesn't, I want to see a new low, and I'd prefer a smaller wave to the low. These are always easier to deal with than these. And we are getting that wave to the low. It's almost high odds bet that we will get that 83.68 retested, and hopefully we get the 83.50 to 83.25 retested, and we get a setup at that area, right? So again, when you look at the bigger picture on CL, it's just not bearish. Sorry about that. Let's pull this back. Have it hidden here somewhere. There we go. Let's see, that's CL. Yes. Here we go. Just when you look at this bigger picture, when you pull it in, you can just see you're going to clearly have to get below 80.80 and take out all these stops down here, right? And then what's going to happen the first time you clear that 81, right? All the stops have to be built up behind there. It's going to get behind, and unless there's fundamental news that changes the way the market perceives the information, that's probably going to get bought, right? You can see there's a big structure right underneath it. This is probably going to get bought. So the way we look at it is 83.51 followed by 82.55. Those are our key areas down here, right? Followed by 80.80. All of these getting underneath here, getting a wave to the low, above the wave to the low, can generate one of these large swings back to the upside. On the short side, right? It's not that there's not shorts that will set up, but 85.40, 85.96, and 86, those are our more prime shorts. Roll them to the downside. Now, because these are occurring, I want to just point one thing out. Because these are occurring at the very high, remember, as we set new highs, right, security amongst investors gets higher and higher, right? So we keep getting these waves, and people are more and more certain it's going to just extend. There's no fear, right? So that changes the intraday pattern, where normally you would get a head and shoulders pattern like we had yesterday. And usually, it comes up, gets up here, comes down, tests back up, and maybe you get a second test up here, but this left shoulder holds. I got stopped right on the top there, right at that critical. I think it was 85.20 yesterday on the short, and you usually don't get that one more drive to the high. That is a signature of being at an all-time high. I don't have a way of fixing that other than to say it's a risk just of shorting at the all-time high. And the easier way to do it is wait for the dip and buy the long. You'll notice yesterday how much easier the long was. I think we had a 50 or 40 cent trade yesterday in CL off the bottom. You just have to be prepared for those levels to come in, and the short's just going to be harder than the long. It's easier. It's going to be easier to stack up the long. How do you know it's changed? You'll see range expansion to the downside. Speed will have increased to the downside. You've got to look at those factors. How fast is the dome moving? What's the range? And you can see we just haven't had any of that. As a matter of fact, any quick expansion to the downside in CL has been repeatedly bought, right? Like the easiest strategy here is not figuring out where the high is. It's actually figuring out where the low is. It's taking out the stops and popping huge, right? So mentally, I just want to make sure that I'm on the side of, hey, I'm looking for the traps, right? So let's go look at ES and NQ really quick. So NQ overnight, right? We've obviously taken out this 15,550 to 15,555. The short did set up. This is again, it's not all-time highs, but it's pretty damn strong, right? I'm not looking to be the one to take out the high and mark a location. A couple things need to happen. First of all, we've got to get underneath this, and then there's also obviously a retail gap fill right here. So we'll end up with Dalton's gap fill at 15,540. Retail gap fill wherever it is, somewhere here in this 15,520 area, right? When you look at from the high to low, right, just to get perspective, just from Sunday evening to overnight on Monday night, right, this thing won't be broken in my eyes until we get behind that 62 retrace, right? So you may want to pull this up because we don't have any levels. If you need additional levels that you know we're retail traders, so everyone we know trades the 50 retrace, and some will trade the 382 retrace in here. What I'm looking for is a setup between the 618 and the 786. You'll notice we went up so fast yesterday, everything's pretty poorly underneath. So if you look at it from this logical location, right at the 50, you'll taken out the stops from the close. That little dip we had at the close, those stops will get taken out. At the 62 retrace, really the stops on the structure underneath these wicks, and with the bottom of that structure really coming in there at 15,354. Look for a response there, right? And then if we can get underneath 15,322 to 15,272, that's where we're looking for the swing back up. That's going to stop out higher frame, higher time frame day traders, and we look for big squeezes the other way. And remember, yesterday was essentially a continuation from the stop outs from Friday morning, right? And it was just a continuation. We don't hold overnight, but this is essentially a continuation of that trade, right? If we go look at NQ, and if you were looking for a short last night, right, outside of being willing to short at the high, which I'm not when we're just jamming straight up like this, you can just see all night long. We just haven't gotten underneath a wave, right? So there's two arguments behind this. The most aggressive traders I know will go, well, look, you can see these little roll downs from here, but buyers are in overall control. That 15,568 is the wave to the high from overnight. Again, the earnings were strong, right? This is a relatively thinner index that's dominated by 5 or 6 of those. I forget what they call them, but the leading stocks are. It's heavily weighted in Apple. It's heavily weighted. The index is heavily weighted in Apple, Google, Amazon, and those companies are reporting good numbers. Right, we're right in the middle of earnings season. So look, the retail game is shorts don't mean anything to most retail people, right? Like shorts only matter in our world. So we're looking for dips. If you're looking to short, obviously I think there's good money on the short side, right? And there is good money, but there's better money on the long side. And so what Joyce did yesterday in grabbing that 100-point trade is she set herself up. Just the whole world's looking long. Everyone wants to buy individual equities. Everyone's afraid of missing the next move up, right? There's just no downside pressure. So you're looking for a push to the low if you can get it, right? Or push down if you can get it. So again, balance in your head. Shorts are profitable, but should be treated as scalps until we get some kind of break away from the all-time highs. Longs should be easier than shorts. You're going to have patience and wait for that proper pullback to get that setup, right? So it's a double-edged sword. What most retail traders are doing right now, what are they going to do? They're going to try to buy the open or somewhere near the open and hope for trend day up. I would if I didn't know anything about the market. Like, wouldn't you? Like, think about it. If you looked at your stock prices at the end of the day and you're like, oh, look, we opened down. Like, even one of my friends texted me, hey, I didn't buy the dip yesterday morning. Well, there was no freaking dip yesterday morning, right? Like, there's no measurable dip, right? And then I have a friend on the other side who's like, I was looking for a 4% correction this week. So I got to tell you, earnings, the 2 weeks prior to, but in particularly the first 2 weeks of earnings season is incredibly bullish. It is hard to get a downside move. You're going to have some major company miss earnings by a mile, and not just a little bit, because everyone's in a pretty forgiving mood in this case. And what tends to happen is they bring down the individual name, but then everything else rises again. Okay, so you have to have that mentality in your head, guys, when you're setting up your trades, which is why yesterday, Sean said, hey, you got pretty quiet and you didn't take very many trades. So I want to address that for a second for the whole room, because usually I find if one person's thinking it, everyone's thinking it. So I got up very early to trade yesterday because I had a feeling we were just going to grind and I wanted to put some P&L down. Okay. Secondly, yes, so everyone knows I have a C game, a B game, and an A game, and my main focus is on my C and my A game. My C game, when the market goes straight up, is to try to find shorts. I get very frustrated by the just straight up move, right? You can, I'm sure, hear it in my voice sometimes. You used to see me taking trades at levels because the market was going straight up, and just, we would end up with 2 or 3 stops in a day because I kept trying to find the turn, right? I've surrendered that. Part of my focus on that C game is the first part was just don't fight it. That was C game A, to improve. C game B was don't let it bother you, because what it do is it would wear me down so hard I couldn't take the rest of my trades. But when I see it grinding in a straight fashion, yeah, I'm just gonna take my hands off. I can teach someone how to trade momentum. I don't trade momentum very well personally. Okay, for whatever bugaboos I have in my head, just don't do it, right? So lastly, if you are going to take momentum, right, take the signal, right? Triangle down, algo, triangle up. That's a good entry right there. It's after the close, but it's a good entry, right? When you look through here and you're looking for the signal, triangle down, engulfing bar, algo fire on top, right? That's a good trade. No demand, algo on top. That's a good trade. You'll notice the shorts, if you try to use the algo for shorts, some of them worked, some of them stuffed you, right? So I would be focused. I would be focused on the long side until what? I see a meaningful break. What would be meaningful in the NASDAQ? Actually, 200 or 300 points down would be a change. 100 points down is just profit taking, right? 200, 300 points down, inability to rotate back up, crushing levels, blowing out anomaly levels. Those things are like, hey, this is a change of character. That's step one. Step two is, can it maintain for more than one day? Probably not in this environment, right? Probably day two it gets bought if it doesn't get bought right away in day one. And you should really be writing down in your journal characteristics of banging out at all-time highs. It grinds, right? Secondly, ask the question, where do you make money? Fast market, slow market, tops on grinds, or wide volatility? I know exactly where I make my money. When markets do this, I make a lot of money in that environment. Nice fat rotations, there's two-way give and take. I get paid there. When markets do this all night long, I struggle, right? I struggle, and at all-time highs, we get those nasty beats where you've got a great setup, a head and shoulders like in CL yesterday, and they come in and they take you out, right? This is all about doing two things at one time: knowing your process, knowing your environment, and knowing what you're good at. Those three pieces. And then list out in your C game what you suck at. The other thing is perfectionism. I want to address that. I've seen it in a couple of people, right? I should have caught that. I should have done this. I should have done that. I should have done X, Y, and Z and been perfect is going to kill your trading, right? No one gets it perfectly, right? And I hear a lot of people when they're talking about trading leaving the gratitude out. They're very quick to point out what they missed, and they're very quick not to point, and they completely forget to go, hey, but I didn't get run over short, or hey, I didn't, blow up my account yesterday trying to fight this all day long. The assumption is always that I will make the right decision. Well, make the different assumption. I'm pretty prone to making the wrong decision. Did I manage my stops well, right? Did I walk away at an appropriate time if it wasn't my market? Did I recognize it wasn't my market? And give yourself check marks for that part of your game, right? Because let me tell you, while yesterday, because we didn't short, right? Yesterday looks like, well, I could have had longs and I didn't take them, right? But there's another side to that story. There were short setups in here, and if you took them, you found yourself in stop city, right? Like repeatedly just pulling your hair out. Lastly, we are due for a big down day somewhere in here. I don't know where it's going to come from, right? The first down day will most likely be very, very difficult. Be slow to act on the first down day, right? Let the process set up. Let it get to key levels off our swing levels before you start looking for the long. Let the wave to the low. Don't build up a bunch of stops on the way to missing the prime setup that we end up getting, like on Friday, right? We weren't doing a lot on Friday until all of a sudden we got to that key area and I said, this is what we're looking for, right? Find a way to get long down here, right? And then lastly, decide whether or not you want to trade inside the value area. As for me, I'm still going to wait. Now, see how big that value area is? It's huge. It covers over 100 points, okay? So don't get in the middle of value. See if you can get to the edge of value, right? This is yesterday's IB high. So a logical place would be IB high to value area low. We'll probably find a response because the area is so wide. Value area high probably gets a response. Why? Again, it's such a wide area, right? So look for this setup and just be nimble. When you come look at NQ, right? So we know we can't get below a prior day's low, and NQ is highly unlikely today. It's a mile away. So that's when we switch over to this chart and go, okay, what are the areas? First of all, I don't want to trade in that 15,500 area. Prior day's point of control, it's below the gap. It's just a lot of noise. This is Dalton's gap fill, retail gap fill, prior day's point of control, and that 15,490 would be a trap on the breakout, right? So what would I look for? Test of the 15,411 for a backside test of the 15,490. That's a 100-point potential trade in there. I know that 15,578 to 15,570 has held pretty much all night long since about 10 o'clock my time, and it has not broken. So we need an impulse move, and we need to see negative space. This is negative space on top, right? We need to see negative space underneath before we're pretty sure that's been broken. 15,542 is prior day's high. It probably gets an initial response. And then into the value area. You need to know whether or not you're going to trade in value area. I'll already tell you, long term, it'll be easier if you trade outside of value area, but you've got to make the decision as to which way you're going. The one thing I will say is, whichever one you're going to do, just be committed to it one way or the other, because there is no free meal, right? Everything we do has a negative and a plus column to it, right? There'll be trades we take. Point of control is a perfect example. Sometimes it works beautifully, sometimes it sucks, right? So what's my solution? Since it's 50-50 and I end up getting a lot of stops in that area, it's an area where I can get a bunch of stops in a very small time frame. I just don't want to trade there, and I'm not going to trade there, right? Yes, I will miss trades. I will also avoid the frustration, and it's my mental capital that I'm more concerned about preserving than followed by my trading capital, right? Followed by my calmness. And so I know if I just stay out of that area, that's the right answer for me, right? 99% of the time, as these areas get wider, at the edges of them is where I prefer to trade, right? And in the middle, I prefer to stay out. And I know I'll miss trades in that, but that'll make it easier for me to avoid the stops. Your option B is just cut size. But most people have a tendency to have a difficult time cutting size, and it does mess up your kind of progress of if you have a high win rate you're staying, when you start varying your trade sizes, you're going through your trades, they can wreak havoc on you can have a high win rate, but then you end up cutting trade size when it's, when it's not a prime location. And then it adds another thing that you have to think about, right? Do I cut size here, regular size, oversize? And it takes a lot of experience to shift through those gears smoothly and still have your eyes on the prize, right? So again, first clue that there's any issue is below 15,542, and it probably gets bought realistically. And then obviously sign that there's a problem is we get below 15,322 today. That would wipe out all of yesterday's gains. Obviously, clearly would blow out the 50/60 retrace. Attitude has to change there at that point. Finally, ES. Okay, so ES, see we have our gap there. I didn't look overnight, but 45.64 was an area where we would look for exhaustion, right? So we're in the right area. Again, complete bull market in this case. We're looking to get below 45.29, followed by 45.15, followed by 44.87 for the bigger swings. You can see this is all poorly auctioned through here, so it's quite possible the stops have to be sitting from this move right here at 45.29. It's the logical place to put your stop if you're long. You haven't gotten it until you get another leg up. They probably move their stops again below this 45.55 as well, right? There's probably some stops sacked up in that area as well. We'll see if they come and take them. From a individual chart perspective, we have, right, if you look at overnight, we've obviously busted above the prior day's high. There's nothing above that's meaningful resistance. We haven't been able to make it back to even retest the 45.64. Again, I imagine that's a responsive buy. First time in, want to stay out of the 45.60 area, right? 45.51 is a trap for a head and shoulders potential trap from a day time frame, right? And then obviously underneath that, you have the bottom of the value area. Again, very stretched on this value area. So this is where we pivot. Top of the value area, bottom of the value area, probably work here. Middle of the value area, I would stay out of, with the exception of 45.51, probably gets a response. First time that has pretty good muscle memory when those were former highs. Again, let the algo lead you into the entry, right? So I don't think I have anything else, guys. Just look for the setups. We don't have to be in a rush. We have the housing numbers at 9 o'clock. I don't see any Fed speakers. If anyone does, please update me on that. I am not going to try to make a miracle happen on a day where I know, like if you look at the 5-minute charts, potential open drive higher, right? We've gone right to the high. Enki's up 132 points. Let them bring this thing in for us. Get below a wave to the high. Let it break down the first time. Don't take a bunch of stops trying to find the high. If you can pick off the high, mazel tov. More power to you. I'm happy for you, right? But it's a dangerous game, and it's really not all that rewarding when you think about how you're trying to set up your mentality for your risk-reward process. Really, you want to set up your mentality that I'm taking my trades in such good location that I know I have overwhelming odds of getting paid. When you trade right on the edge, and especially on trend day up, you're trading for glory most of the time instead of to get paid. It's a personal opinion, not a fact, right? It can be done. It is very difficult to do it consistently and not get blown out, right? So we obviously, in terms of head and shoulders or possible weakness, have two issues at this point. Our wave to the low is now value area low. So it's right here. Excuse me. This is our wave to the high right here. So you need an orthodox close underneath that. I think everyone knows what that means. Number two, this is your potential trap for your head and shoulders right there. Again, I'd want to see them really push on it. And again, because the market's so strong, who wouldn't be shocked to see it just come in and get a responsive buy out of that? I certainly wouldn't. Or even see it if it establishes a head and shoulder, get a close on the right shoulder and push out again. Again, I'm going to give it a really wide berth this morning. And then CL, you can see right out of the gate where they're pounding it back to the downside. Let's see if we're in a key area. CL We have a CL. Need 83. Below 83.51 is what we're looking for. This is ES. Let me slide that on over. There's my CL. There we go. So you can see CL's pushing into that 50-60, which is also, again, into that value area. So you can see how they're trying to hold that 62, 50, 60, 786 retrace. Again, you'll see it's in the value area. So what should you know immediately? Hey, it can be pretty tricky, right? This comes back to the question, which you really should journal about. Do I want, right? Do I want to fight this? Do I want to put on, do I want to trade in this area? Do I want to see if I can get it below 82, 89 outside of the value area and trade there? It's a personal call. I'm just going to take a wait and see attitude. You'll see that we did not get to a major short location. It just came up here on the high. Let me erase all this. Oh, and then we're into all that delta, by the way. Okay, so this is the whole thing is the freaking wave to the high. This whole deal is just one giant move, right? So we're into all the delta. It's unfortunate that it's overlapping within value. My assumption is we get bought somewhere in this area, right? We have two ways of looking for where that extension might come from. So we can do A, B, C. We're in the right area. That's a 100 to 161 extension. It also lines up with the 50-60 retraces. So someone's going to try to buy it in this area. That's just too common a way of measuring extensions not to get a response. Again, what I find is, see on this triangle down, now that we have an orthodox close above it. So this only works in bull markets. If the volatility jumps, this is stop out city. So what you're looking for is a backside test of this bar. And then as long as you don't get an orthodox close underneath that bar, look for a response again. This works much better when we're not in prior day's value area, right? So you'd look for a backside test at 83.42. You'd use roughly a 20 to 25 cent stop, or smarter, wait for the algo to fire if it'll backside test to give you the launch, and just note you're inside a value area, and then a 50-60 retrace makes sense. At the high, see how this was the wave to the high, and then we got power bar within two power bars within 3 bars. I'm talking about this right here. Power bar. You can use that as your alternative wave to the high. It is not as good as the actual wave to the high. But if you highlight that, it's good. It's not as good. Okay, if you highlight that, you'll see we get the orthodox close underneath, right? Backside test, no demand. There's no demand bar, no supply. Little yellow dot underneath on this bar, and down gave you the roll. So in here, what we want on this backside test is we want this same, if you'll use this, so you can just take this into this 83.42 and hope it holds. But what you really want is one of these little green diamonds on top to tell you they're going to lift and take it back the other way. That stops the anxiety of both just buying it blindly. And you will see, so it actually gave a short signal here, right? But it's backside testing this down arrow. So what you want to see is what? Some type of algo bar kick off over here, either a blue speed bar or a bar with a green diamond on it. Now that we're getting the backside test of this down arrow, and if you can get, like, this should print a yellow diamond on top, and it would be long inside of value 83.47. So that's long. I will take that. Let me see if I can grab it here real quick. I grabbed 83.43. I'm grabbing some 83.44s. What am I going to use as a stop there? I don't want it to get, so see that bar? I don't even want it underneath this bar now. So 15 cents is going to do it for me. So I took 43.33 plus another 5 cents is 43.33, 28 stop. Right? And what's the caveat? I'm trading where? Inside of the value area. So if I get stopped, guess what? I took the risk inside the value area. Start making a column on your spreadsheets. Trades inside a value area, setups inside a value area. Start tracking your win rate so you can know what you want to do. I'm long 83.43, stop 83.28. I'm going to target 15 cents for my scale, which actually I think we can tag that 83.68 up there on top, which is value area high. We haven't revisited it yet, and really into these parallel power bars up here, 83.75 potentially. Okay, so I'm taking a risk by trading inside value. We'll see if it works out, and if I get stopped, all 100% on me. Okay, so that's my 2 cents. You can also see we had the sideways structure here, so you know that we had volume build on here, and we're testing that over here as well. So there's a couple things in our favor to make the trade work here. It's higher risk. I'm willing to take the stop. You've all seen me get smoked when I've taken trades inside value area. You've all seen me get paid sometimes when I take trades inside value area. I'm willing to live with it. I've really managed my drawdown. There's been no drawdown. I've really managed either to be trading overall net flat or profitable all the way through this run up. It's a first for me. I'm used to getting pretty run over when the markets go straight up like this. So it's nice to have this balance where I have a lot of flexibility in here, and I'm not putting very much pressure on myself to make money per se, so I can just focus on the setups. Does anyone have any questions about that setup and why I'm taking it, or anything else I've covered this morning, guys? Rich, it would. Hold on one second. How am I going to set that up? Google. Oops, wrong one. Google. And I'm going to end the video there. Thank you for joining. If you'd like to, anyone watching this, by the way, if you would like to join us or get a 3-day pass to the room, there you go. tradeandperform@gmail.com. Just send me an email, ask for a 3-day pass. I'm more than happy to share. Anyways, have a great day, guys. I'm going to kill the video here and post it for anyone who wants to review. Um,